All right, traders, it is time to prepare to trade the best setups at the best prices. In terms of the SPY, it just continues to go on up as we are approaching those 52-week highs. We are definitely due for a pullback. With that being said, I'm going to be addressing the levels that we are interested in shorting the SPY and buying put options, making money on the way down. I'm also going to be addressing the levels that we are interested in going long on the SPY and where we're planning to buy call options. I completely understand that the overall trend has been bullish as of late. But people seem to misunderstand, looking past, throughout some of my videos, that we were interested in buying call options, but unfortunately, in terms of the levels that we were interested in buying for the bear trap, those oversold levels never hit. But things, time shall pass, and those levels will potentially hit within time. We are waiting. I'm going to be updating all of the new key levels. I'm also going to be going over towards the end of this video, recapping my red day. Because the first time, within about 2 weeks, I did have a red day. It was an $8,000 loss. And I'm going to be recapping the mistakes that I ended up making on Friday in my trading. So with that being said, make sure you stay to the end and let's get straight into the analysis. So in terms of the SPY, man, I was looking at, all the ticker symbols combined within SPY. And in terms of, the top 10 symbols, a lot of these top 10 symbols are pushing for, new 52-week highs, some even approaching new all-time highs. We got some big runners like, Microsoft, Nvidia, right? And SPY's been pumping up lately. Now, I was studying all of these charts throughout the history, and the chart that looked very, very similar, if you were to compare, one of the symbols within SPY to SPY's actually, daily chart, the one that looked the most similar to me was Apple. If you compare the 52-week chart of Apple stock, I would say it looks very, very similar in a sense to SPY if you were to compare the 52-week chart to each their own, right? Now, here's what I think we are potentially setting up for. You could see right here, Apple's 52-week highs were towards this 175 level. The first time Apple tested that 175 towards those 52-week high levels, that's where we saw a nice bull trap. That's where it finally had a nice pullback back towards support, right? So I personally think, and I would personally be interested in doing the same with SPY. SPY is very, very close to the 52-week highs. And basically, with how the market is setting up and looking, it looks like SPY is going to be topping out towards those 52-week highs, have a very nice pullback. And then when it hits a key support level that we're going to be discussing where the bottom can be, that's where the bears get trapped again. And then it tries to push up for new 52-week highs. That, I would say, is the most likable outcome from a macro standpoint on the SPY. So the 52-week highs are at 431.73. We also have a gap to fill above, one of the highest gaps to fill above at 429.70. That's where you can see a gap close reversal. Basically, once this gap fills, that's when SPY can start to reverse. And you could see when it topped out in this range fairly quickly, we dropped back all the way down to 421 to $412, right? So with that being said, I would say that's the most likable outcome we are setting up from a macro point of view. When we are at 52-week highs, or if we see a small break above 52-week highs, the most likable outcome would be that's when the bull trap is going to trigger, and that's when we're really going to start to get crushed overall. And then from there, they're going to try to bounce it at a key level to set the next bear trap. So what are our levels in terms of the bull traps in our short interest heading into this week? There's going to be 3 levels. I want you to write these down. Our first level is going to be 427.92. This is where the SPY closed at. It closed at 427.92. The previous closing price is always going to be one of our daily key levels that we're going to be interested in trading at. Right now, the SPY is having a small gap down. If it does gap down, we're going to be interested in doing puts with a tight stop at 427.92. If we do puts at 428, the max pain on those is going to be this 428.70. Max pain 428.50 to 428.70, that zone, right? Now, our next level that we're going to be interested in for puts is going to be the 52-week highs. $431.73. We should see an automatic rejection at that zone. This is where a very nice bull trap was created. There was a very nice top wick where it hit 431.73 and it closed at 429.70. We also have a gap to fill at 429.70 and it had a very nice reversal towards this level with a major bull trap. That would be considered one of your best levels for puts. Now, let's say they do end up breaking this above the 52-week highs. What would be the next best level after that if they were to break this above those 52-week highs. So for that, what we're going to do is we're going to go back further throughout the daily chart, and we're just going to identify the next overall resistance level. So you can see right here, wow, there's a ton of resistance. What level is this? Look at this, man. Oh my goodness, man. Who was pointing this out? Look at this 428, man. 428.70. Are you kidding me, man? Look at the amount of bull traps that were set at this 428.70. 428.70. It drops back to 417 the next day. 964. Remember the gap? And look, there was a gap to fill right here. You see that? There's this gap at 429.70. Same thing, right? Massive bull trap. It went even lower to 412s. Are you guys seeing this, man? We're approaching 52-week highs, and there's major bull traps at this 428 level that we just tested, and it's already rejecting and attempting to gap down. Very, very interested in puts. Study this pattern that nobody's bringing awareness to. Every single time a gapped down from testing that 428 level for the first time, it got crushed, man. Are you kidding me? Look at this. Massive gap down, closes weak at the lows. Massive gap down, closes weak at the lows. Massive gap down, closes weak at the lows. We could be setting up for a sell the news play, man. When we're testing these levels for the first time, I'm not going to be interested in calls. There's no way in hell I'm going to be interested in calls. And, in terms of calls, I completely understand. People were saying in my video, this guy's just bearish. He's just short biased. We weren't getting crushed overall on puts. We were scalping puts, and we did overall well. I had a fantastic week last week. Even with an $8,000 red day on Friday, it was a fantastic week. But with that being said, I had my levels to buy calls, but unfortunately, those levels never hit. And this could be a type of setup where if those levels do hit, we can just keep on getting crushed for the next 1 to 2 days. We shall see, man. But like I said, man, 428 critical resistance. If the 431.74 doesn't work out, then the next level is 435, man. That's your next level. The next level is this 435. You can see right here, 435 to 436. That's your next level. We're looking to go short. But overall, that's what I'm looking at, and that's what I'm interested in doing. If we do gap down tomorrow, I will be interested in those put options. Right now, we're trying to gap down. So we shall see, man. Now, if we do gap down, basically, in terms of like shit hitting the fan, all we would really have to do is crack this like 420.670 to 426.30. If we crack 426.30 and that forms resistance, we're looking at a very nice hard pullback. We also have a gap to fill below at $421.82. As you can see, man, basically what would trigger this gap fill is this. If the SPY fails to turn this level, they're going to try to bounce it at first, but if it fails to turn 426.30 into support, it cracks, bounces back up, forms a lower high, reacts as a resistance. All it's got to do from there, man, it's going to be likely super bearish, and if it goes under 424, then it's just free fall. If it goes under 424, cracks, reacts as a resistance, there is no support. It's just going to free fall to start to fill the gap at 421.82. That's my thoughts. That's my analysis. I will be very interested in puts, especially if we do gap down tomorrow. I've also seen how this overall sets up. This just looks super bearish, man. Everything about this is giving bearish vibes. So just understand, on the daily chart, if we were to compare it to Apple rejected 52-week highs initially. That's where the bull trap finally triggered after the bears got destroyed on the retest of 52-week high. We nearly retested 52-week high, and if you go back throughout the daily chart, if you study what it is that I showed you, you can just visually see, man, the first time it happened so many times, but the first time this was just sitting at that 428-ish level, and it gapped down, big sell-off, and a gap down, big sell-off, and a gap down, big sell-off, right? So who in their right mind would want to be buying calls at the top of this 428? I just don't see it, man. If I hit puts at the top of this, I'm not risking a lot, and I get back in at 431.70. It is just a matter of time before a nice bull trap triggers for the short term. And when that bull trap does trigger, it's likely going to be a big, hard crash where those levels where I was interested in buying calls at likely just don't even work out, and it just keeps on selling off, and it will likely be a fast, quick crash. It will likely crash a lot of points in a short period of time. This can be an example in a sense, and then it just recovers. So basically a big crash in a short period of time, then it starts to recover. Now, what would be our levels where we're interested in buying call options at? So where are we interested in buying call options at? Our first level is going to be 421.82. As you can see right here, there was previous resistance on the SPY at $422. Once we broke above that resistance and had a gap up, it had a very nice run to 428. So the first time this goes back to the previous resistance level, it's likely going to try to bounce and react to support. So my first level for calls heading into this week is 421.82. As you can see, I am interested in buying calls, but like I said, it has to hit the oversold levels. There's a whole nother strategy, and I don't like addressing these levels. This is more like market open, real time, different strategy. You got to be in Trader Society. If you want to follow the trend and buy calls at higher levels because dips are printing, you could do that. Basically, we look for breakouts to occur, and then when it drops back down to the level where it broke out at, we look to buy the overreaction. We look to buy calls there, right? That's another strategy that we use. I can't really say that in these videos because the market's not open right now. But based off the oversold levels that I can say, I'll be looking at 421.82, and I'll also be looking at 414.65. And then we love, this is our full port level for calls. Whenever we decide to drop back down to 411, that's where I'm going super heavy in swing trading calls with a bullish candle on daily. So those are my 3 levels for calls. The best ones to work out are the lower levels. And again, when the market's opening, we're going to be analyzing the trends. There's going to be new daily updated levels. This is what I can say in terms of, making these videos in advance. We're interested in puts towards the 428 range. If we get stopped out, then we're looking at 431.70s. And we're interested in calls at the lower oversold levels as of now, 421.82, 414, and 411. If we ever go back to 411, whenever that decides to happen, that's the level where we're looking to swing calls extremely heavy for a major bear trap, man. So believe me, I'm interested in buying calls. It just has to be at the more oversold levels in terms of when I make these videos. Now, if the market's open and the trend's super bullish, I might look to do some quick scalps at the more higher levels. Now, that's something that I personally don't like to do because it's just so overbought and I don't like buying out those levels. It just depends, man. If SPY was at an overbought resistance level and it broke above like 2 or 3 points quickly and then it just crashed right back down 2 to 3 points, then yeah, I'd be interested in buying calls at the previous resistance with expectations of it reacting as a support level because that had a massive breakout and it's likely going to have an overreaction to the upside since it had an overreaction to the upside, then downside, then back to the upside, right? So those are just some tips and tricks that I can share with you in terms of like real-time analysis when the market's open, right? But in hindsight, based off the video and what I could put out right now, that's my overall thoughts. That's my overall analysis. We will be targeting the previous closing price, especially if we gap down. If we get stopped out, we will be targeting 431.73, our next level for puts with tight stops. And in terms of calls, in terms of advanced, all I can say is 421.82, $414, and $411. If we see any bullish candlesticks on the daily chart at 414 or 411, we will be interested in swing trading calls. 421.82 is too high for me to swing. I will consider that more as a day trade level. With that being said, that's my overall thoughts. That's my overall analysis on the SPY. Now, let's address the trading that I ended up doing on Friday. So unfortunately on Friday, I did have my first red day within a couple of weeks. What really messed with me is, and one of the reasons why it was a bigger red day is because these are the reasons. I was over trading. I made too many trades on a 30-minute candle going against the trend. Even though the trend appeared bearish, it wasn't. So first of all, over trading. I made too many trades in a short period of time, right? The second reason was the strategy just didn't work out, and that's okay. Nothing's going to work out 100% of the time. I have no regrets. You guys knew I was interested in playing puts at 425. So the first mistake was I played the puts at 425, but I did it with no confirmation. And this is called jumping the gun. This is something that you don't want to do on an extremely volatile time in the market. So we knew 425. If you go back and watch my videos, I explained to you on why I was interested in short selling there. I'm not going to be going over that again. You can go back and watch the other videos. But basically, when the market opened and this started ripping up, when we were at 425.30 right here towards 9:32 a.m., I started buying puts. And there was no confirmation. That was the problem. So look, man, if you're going to get into a position without confirmation, the best thing you could do, first of all, take a starting position. Second, it's probably not too wise to do it on an extremely volatile time, because if SPY's just going up and there's no red candles and you're just buying puts, it's a quick way to lose money and get trapped. Because basically what can happen is, even if you're right, you're going to get stopped out and then it's going to crash. And that's exactly what happened. Now, if I would have just waited till some red candles, I would have had a much better entry and I likely wouldn't have been stopped out. But that wasn't the case. And in terms of jumping the gun, this is the reason why. I basically just wanted to buy puts on the first red candle, and the candle that I was buying puts on, it was about to close bearish. It was looking bearish, and then at the last second, right before it closed, it flipped bullish. So wait for the candlestick to actually close. I understand it might be flipping and looking bearish, whether it's a 1 minute candle, a 30-minute candle. Wait for the candle to actually close. Don't feel like you have to emotionally get into a position before the candle closes. I understand it may look super bearish and you like the price and you might want to get in, but it can flip just within seconds, within a second before it closes, and it can mess up the whole trade. So jumping the gun and then just getting in, again, if you're going to get in without confirmation at the most volatile time, you're likely just going to be stopped out. Don't feel the need to rush in and get into a position with no confirmation during an extremely volatile time. Because I had the right idea with the puts. 425.30 was not a bad entry because we did drop all the way to 424. Could have made nice profits if I held. But I'm not holding for big losers. I will get stopped out, right? So use some confirmations. Don't jump the gun. Wait for the candlesticks to actually close. Trade what you see, not what you think. I think it's bearish because it looks bearish, but the candle didn't close, so it can change. Trade what you see, not what you think, right? Don't feel the need to rush in and jump into a trade. Now, this is where I started throwing money away. So, once it looked bearish and right here it turned support into resistance, I played puts. This was a great trade. I did puts and then I sold into this dip. I made a lot of money back. I lost 8K in the morning, and then I hit this trade, made almost 5K, made a lot of money back. This is where I screwed up. I hit that trade nicely, and I gained a lot of confidence. And I actually won more percentage-wise on my second trade. I won more percentage-wise than I lost on my other trade, but I didn't size in as much. So another tip you have to understand is figure out what your outcome is going to be. If you're going to trade with $10,000 and you're putting in $1,000, $2,000 into that trade, your results, are you playing percentages, or are you trying to play a risk management strategy where it doesn't rely on percentages? You size in bigger to make up for the previous loss, right? That can get you screwed. Now, if you're trading with the same size every single trade, then it just comes down to the percentages of the contracts. So I had a really good trade where I made more percentage-wise, but I wasn't up because I put more into the losers. That was another mistake in a sense. Now, this is where I went wrong, and this is what really screwed me off and threw me off and pissed me off. And in terms of what had happened here, I would just say this is just one of those things where the strategy just didn't work, and that's okay. But what's not okay is to keep on over trading if something is not working out. And that's what I did. And that's where, so I was down 8K, and then I was only down about 3.5K. Then I kept trading, and then I was down 9K. And then I had 2 more wins, and then I just called it. I finished the day like 8K loss, right? This is where I screwed up. So in terms of the 30-minute chart, it was super bearish. It hit my level. It was super bearish. And I told myself, all right, it's time to do puts, man. Wasn't at the best level towards the oversold support, towards the lows, but the confirmation was just so bearish. Now, in hindsight, you guys know SPY loves retesting the high of these wicks. When it looks bearish, or if it's green, typically when it's green, it tries to retest the high of these wicks. Sometimes when it looks bearish, it doesn't retest, but if it's green, it has the high wick, like we talk about. See how there's a high wick right here, and then it tries to retest the high of that wick, right? This just looks super bearish, and it was at one of our best levels, so I hit puts. Now, not at the best price on the intraday chart. It was literally at the low of day, and that's quite the big profit. That's quite the big margin there, right? So I just kept getting whacked, man. I did it like 3 times. I just kept getting whacked. On my second one, I had a nice little win, but I held it too long, and the trend was bullish, and I got caught up in it, and then I had to get my loss. So the strategy just didn't work. This was a nice bearish 30-minute. You see right here. Look at this candle right here. Nice bearish 30-minute. It's just floating up. It's going to try to go back down to fill the gap, right? It just didn't work. But if you look right here previously, the same candlestick, look at this. Same bearish candlestick. And then it has a big sell-off, right? But then eventually it retested the high of the wick, right? And that's why it doesn't surprise me that it retested the high of wick. But in terms of timing, logically, it just didn't make sense, man. I figured the candlestick is so bearish. There's a gap to fill below. It's too early for calls to try to print and go back up. It has to drop first, but it just didn't work out. You could see it worked out right here. What was one difference? Well, SPY was gapping down here. In terms of when it didn't work out, SPY was gapping up. That was the only difference. But man, it looks so bearish and it was so overbought, but unfortunately it didn't work, and it worked more at the oversold level. Very unfortunate situation there. But that just happened to be one of those situations where the strategy just did not work out. I mean, if you compare it, it's nearly identical. The only difference was SPY gapped down here and SPY gapped up here. I figured since it's more overbought, might as well try it. It's worth a shot. But then I just kept on hitting it. That's where I went wrong. I hit it like 2 or 3 times, and I was down like 3.5K, and then I racked it back up to 9K. Then I made 2 more trades later on, very good trades, and then I finished just like down like 8K. They weren't like massive wins, but overall, man, those were the mistakes that I ended up making. So I gave you our levels that we're interested in trading at. And look, man, here's the deal. If you want to surround yourself with the right community, with the right network, with the right traders, man, I would strongly encourage you to join Trader Society. It is the first link down below within the description. And I'm telling you, man, you will get access to the money making floor, man. I'm telling you, this right here, this SPY floor, this is where all the money is made, man. The SPY floor. You get access to the SPY floor. You get access to the watch list, the trade ideas, the trade alerts, the live streams, the voice channels, the general chat, all the moderators, all the networking opportunities, the community. I would strongly encourage you to join this program. It's the first link down below within the description. And you also get access to the video lesson library that teaches you all of the unique price action gap trading strategies. It teaches you how to master price action, how to master the gap trading strategies, how to trade SPY, how to trade stocks. You can use this on stocks, penny stocks, SPY. It works with everything within the stock market. And you can also get access to the mindset and the psychology and the risk management and position sizing training. If you want to check it out, it's the first link down below in the description. It is a one-time fee and you get lifetime access. We are absolutely going to crush it tomorrow, guys. The market is on fire. We're in a very, very hot market, a very, very lucrative market, and we are setting up for some amazing opportunities for puts. And then when the bulls finally get trapped, we're going to be setting up for an amazing reversal at some oversold levels to swing calls, man. We day trade and swing trade. So if you want to be a part of it, it is the first link down below in the description. I will see you guys tomorrow live at market open.